Good morning, everyone. This is Otsu again, and this is Observations with Otsu. I want to apologize immediately for last week. I was sick last week. Fortunately, it was nothing super major. It was just kind of a stomach bug, 2 or 3 day bug, but I was really concerned it might be something worse, food poisoning, um, even pancreatitis. I could not walk for like half a day. I was getting very concerned. I almost went to the emergency room. Decided to um, just kind of deal with it, and I went to bed. And it woke up a little bit better, so things went well, fortunately. But that also caused me to delay on my videos, mainly a lot of the free ones. I know a lot of you guys. I mentioned some alt picks that we could look at last week. I was not able to do that. We can look at a few today and Wednesday to kind of compensate for that. But overall, feeling better, ready to. I am nursing a toothache, but that's okay too. Um, Willing to get through this week and see what we have for this video. As you guys might be familiar with, Observations with Otsu is just a weekly insight on what happened last week, what we can expect possibly for this week. Usually throw out a bullish and bearish scenario for the week as well, so you have an idea, depending on who you are and how you want to take the week. And so we'll look at that as well. Usually cover total market cap, Bitcoin, Ethereum, Binance Chain, Solana. We've been switching out Solana with Dogecoin and some other coins, but I think we'll probably just go the traditional route today. And also, I do have I'm making a not necessarily a major announcement, but with Apex Academy, we have officially started week 3 yesterday. It's a 12-week masterclass. I've called it boot camp, whatever you want to call it. It's not necessarily a paid group in the traditional sense. It's much more of an education and mentorship group, and I can, based off of the people, we have a good amount of members in there right now, but but it's still small enough to where everybody gets a chance to speak and a chance to talk to me personally. But I'm going to plug it for maybe a couple minutes because based off of the reviews, people that have just talked to me have said like, wow, this is a high class group. There's a lot of hard work being put into this, and I really do appreciate those kind words. But also, like part of my motivation to start the group was to give people content that is way above the value of what they see from other people and other content. Like I see people charging $200, $300 a month. I see one out there currently that's $250, $300 a month, and they don't really provide that much value. I see a lot of groups that you can tell just based off of even being in there for a month and based off of the content that they are trying to do it for the money, so to speak. And I'm okay with that to an extent because I'm a business owner. I get that, but at the same time, like it's clear to me based off of someone that has, I've got several businesses myself. One of those is being a marketer, so I know all the marketing tricks. I know all the prestigitation that you can do to try to lure people in, and that's not what I do. That's not my MO. That's never been my MO. Can't really go into detail about my marketing business, but there's aspects of the marketing umbrella that are more like clickbaity, and I don't use those, and I don't get a lot of high profile clients from my business because of that. I don't participate in clickbait advertisement. I don't do any of that fluff. I do content based marketing, which means you bring in people to your brand because of what you are actually trying to give to them. So you are doing something for them. So it's like, I know some of you guys are split on the Apple Android thing, but I guess something like Tesla, right? Like generally the crypto world likes Tesla, and they don't have to advertise as much because they know the product that they have, and that's the same. That's the same with the crypto world as well. If you have a group and you're constantly trying to appease people, and try to, flash them with P&L charts and things like that, but at the end of the day, they're not walking home with anything. That's because you're the product. That's what that group was designed to do, and that's not how I roll. And so, I've had two people in particular tell me, and one's currently active in another group. He's honest about it, and he said, he said, "Wow, I've learned more with you in a week and a half than I've learned more with them for 6 months now." And so that's I'm very thankful for that, but at the same time, I'm embarrassed for that other group. And so, like, you guys deserve better content. Is basically what I'm saying. You deserve better content. For the 12 weeks, it's $500. So it's about 180, a little bit lower than $180 a month. And I can tell you that it's not overpriced. I've literally, I've had 25%, roughly about 20 to 25% of my members already tell me that their money, it's already worth the money. So I believe that's saying something. I've posted in the Twitter that we got our own Apex Academy Twitter account now, but I do retweet from that, and we posted 48R for the first 14 days. 48R, and I can tell you a lot of I can tell you that there's some groups that don't get that for months. There's I can't, even some of the high profile ones, I don't have any proof that they are giving you that kind of performance. And that 48R obviously will go up and down. That I'm expecting that to be an average over time. Hopefully it keeps going up. But if I'm already delivering 48R on my one bot, I've got 4 bots. So I'm hoping that just speaks for itself. I'm really not trying to necessarily plug, even though I said I was. I really want you guys to see the content, and like this is a masterclass where like the first 2 weeks are basically like if you know absolutely nothing, the first 2 weeks are just perfect for you. I even got like a week 0 module, so it's really like it's actually more like 13 weeks, and so the first 3 weeks roughly are like for absolute beginners. Like if you know nothing, this is like a really good chance for you to not only just learn, but to learn really fast too, because I believe the market is going to change here in the first quarter of 2023. And so that's something to consider as well. My main goal is so that you guys become better traders for the future. And so, the first 3 to 4 weeks is mainly learning all the textbook things that I can share with you based off of my 8 years of trading, 5 years of crypto trading, and show you like what has worked the best. Like I compare all these things, and I was just explaining this yesterday, that when like just patterns, like price action patterns, I talk about ARUN a lot. Like in ARUN, you're not going to get anywhere else but my group, because I'm the one that created the advanced ARUN tactics, so you're getting it straight from the source. But yesterday I was talking about patterns and things like that, and it's not good to just look at every pattern, and that's the mistake a lot of people on crypto Twitter do, is that like they have these, we have the swing failure patterns, we have all this, and I made some tweets about this yesterday too. You'll find that a lot of those patterns are actually completely useless to follow, because they suffer from one or two things. Either you see them often and they don't actually have any effect on your position, or they don't have they have a good success rate, but they don't happen very often. And one that I really picked on was swing failure patterns, and a lot of people were shocked by that. I had somebody message me privately last night and said, like, why would you put swing failure patterns on the ineffective list? And one of the reasons is a lot of people focus too much on that pattern as a metric by itself. Now, if you combine that pattern with other confluence points, it is very, very accurate. And that's what I'm teaching in the academy, is like, yes, I want you to know what swing failure patterns are, but I also want you to know that these work best when they're confluent with this other type of pattern. Same with Same with my, I've got four scripts here. I got the color band strategy. I got the liquidity. I got my apex. Or no, it's just the three. And the fourth one is a bot. It's a volume, relative volume based bot. So I teach people like, okay, you can use this pattern. You can use X, but it needs to be used with Y. So a lot of people will just share the patterns, but they won't share you the strategies to get these patterns to work well. And that's one thing about my liquidity script is that it works very effectively under one specific condition that happens a lot, and it gets ignored. And I'm getting more more vocal, getting much more vocal about what you guys should be doing versus following these random um, triple follower account idiots on Twitter that are just clickbaiting you and telling you to buy this coin that they happen to be invested in before they even tell you, flashing all these P&L charts, doing all this, doing all that. But here, at the end of the day, you got to focus on you, because some of you guys are single and under 25. You know, some of you guys are married and 40 years old, 50 years old. I've seen it. I've talked to you guys, talked to everybody in between, men, women, married, not married, kids, no kids, overseas in Asia, Europe, United States. I've seen it. I've seen you guys everywhere. And the best, like, at the end of the day, you guys are going to walk away from following these accounts, and you're going to be responsible for your own life, your own trades. And I don't want you guys to fail. Like, I know this, like, I failed a lot. You know, I'm not 20s. I'm not in my 20s anymore, right? So, like, I failed a lot in my 20s, and if you're there, I don't want you to fail and make mistakes like I did. So that's honestly really one of the major reasons. Because at the end of the day, I've been quote unquote unemployed for 2 years now because I have my own business and I trade full time. And if you really want to trade full time, if you really want to do your own things, break that 9 to 5, you got to put in the work and do some unpleasant things first, as far as discipline. You know, that means learning that you probably suck as a bad trader to start with, but also, like, and I taught this in the academy too. Like, you know, I have one article that I share per week for people, and last week's was, or the last week's article was that you can be a bad trader and still have a good portfolio. And the reason I said that is because a lot of people come into this as they're a bad trader, and therefore they can't be successful. And so, yes, you do. Yes, you probably are a bad trader. I was once. I'm probably not as good as you think I am either. Like, but that just happens. Like, your win rate is going to be small, relatively speaking. It's not going to be 100%. It's not going to be 80%. You know, and you're going to lose trades. And that's completely okay. You need to get used to losing a trade, and part of that is incorporating that into future lessons to where, like, okay, now you're comfortable. You know, you can't make money unless you're willing to lose the money. So that's something that people don't understand. They want all the glamour, but none of the, they don't want to get in the mud. So those all play into that, and so. Part of that is teaching things like risk management, teaching how to kind of just get rid of all your high emotional stakes, knowing when to enter a position, knowing when to not leave a position. Don't get emotional about leaving a position. That's one of the big factors I've seen, both with my members and with just regular people, is like they're too afraid to lose money. So they don't enter, they enter improperly, like they enter too early, they enter too late because they FOMO, and then they exit too early because they want to FOMO out profits. And so they may make $100 in profit, but they could have made $1,000 if they would have stuck in the game. So there's emotions on all levels. Emotions when to enter, exit, looking at the charts, everything. And so what I'm teaching is like, yeah, don't do that. And here's how you don't do that, and here's how it makes sense in the long run to not do that. So it's more complicated than that, but anyway, I say all that to say, for the rest of this year, I am promoting a discount for the Academy. It's going to be $40 off. So it's normally $540. It's going to be discounted to $500, and I'll have a promo code put up, and I'll have that posted today. So look forward to some sort of discount on that. So, and it's much more than that. I got 4 bots. I've got I'm averaging. I advertised 52 hours of video. I was supposed to average about 4 to 5 hours a week of video. I'm averaging about 6. And I've got one guy in particular. I feel bad for him that he's got basically 2 full-time jobs, and he can't keep up. And that's okay. Like he's a nice guy, but it's a lot of content. Okay, and that's why I'm telling you, just like, people have already said in 2 weeks that they've got their money's worth. So I hope you can join us. I hope you can. We got 50 plus hours of video. We got 4 bots. I got charts all the time. I've got homework that you can do if you are a little bit new to this and you decide to do the homework. I have quizzes that you can do. I got reading material for you. We have discussions, lots of different things, and it's been fantastic. And so week 3 is here. If you sign up now, you get all the back information for the past 3 weeks as well. So if you decide to sign up and you signed up today, you automatically become a member. It's all automated for you, and then you immediately get the last 3 weeks of content. So you'll immediately get 11, 12 hours of video, and also in addition to all of the material that we've covered, and then you get week 3 as well. So you're looking at 15 hours of content immediately. So and that right there is probably what more probably more than what you get from any group in its entirety. And this is a group that's designed to stop, by the way. This is not a monthly thing that's designed to last in as long as you want to. Like, this is going to end at the end of February, and so by then the people will be quote unquote graduated. They'll become alumni. And so actually in addition to that, I'm making alumni members will get special pricing for what I have coming up, which is called Aaron Pro. And so Aaron Pro is going to be a completely different suite of Aaron bots. All 4 of my bots in Apex Academy are Aaron bots. Those are going to be transferred into, they're going to get updated. They're currently running on a 1.0 update. They're going to get updated to 2.0. Part of that update is they're going to get transferred into what's called the Aaron Pro system. I'm developing a completely huge, robust, complete system called Aaron Pro. It's going to have much higher performance than it has before. It's going to check the charts much faster. It's going to cover more coins. It's also going to be dynamic, so you can sign up for different plans. Like if you're a scalper, you'll have a scalper plan ready to go for you. If you're more of a swing trader, you'll get more swing-based type entries. If you want something more conservative, you'll get that. If you want something more aggressive, you can get that. So it'll be custom tailored to your style, and then you can also get all of them together if you want. One reason I did separate them into 2 is because if I don't, you're going to get like a lot of messages a day. So you can pick the type of plan that's based off of your trading style. So, and then also for any kind of Aaron Pro is also going to offer like 2-day time frames and higher completely for free. So people will have access to the free content as well. So I don't want to shill nothing necessarily. Like everything that I offer, there's always like a free version available. And so like if people want to taste, they can have it. And then and I've even recommended like you can trade the 1-day time frame on some of these bots and make a lot of money. I'm not trying to persuade anyone to do this. So my goal really is just one motivation is just like, I see the bull market potentially coming next year. Do you want to be a part of it or not? And if you do you want the tools to help you learn that? And I'm offering the tools during the bear market when people should be learning. So that's it with the Apex Academy. I'll have a probably a Twitter thread on that later today. So this is Observations with Otsu. We're just going to go over the same things that we've gone over before. Total market cap. We're going to see what it looks like on the weekly time frame. So we can see from here. So we had a big down move before. We've been talking about this for quite some time now, but had a very significant down move. This was a very complex week last week because we had a lot of things. We had a lot of meetings. We had SBF get arrested, which I hope that news is done. We had the FOMC news, which I hope is done, and we had the CPI index, which was fine. But it also seemed like we had like a data leak as well, and I was looking into that yesterday. I don't really put much weight into that, and part of the thing that I share in general on Twitter and in the Apex Academy as well is that you gotta just I don't even care if the charts are being manufactured to tell you something. You can still look at the charts by themselves, okay? And there's one guy there's well, there is one guy in particular, but there's people in general as well that just try to look at the charts and say like, hey, this company is, it's more so with stocks, like this company pumps this stock for this reason, or the government is doing this, or people are waiting to trade for the FOMC meetings, so then they pump it or they dump it during the meetings. And my response is, so what? It's so what? From not from a legal standpoint, like that's not my control. I have no basis of control over that, right? The thing is like there's people out there that they try to look as far as possible inside each candle and see like, well, what are they trying to do? Like, they're trying to stop hunt people. They're trying to do this. They're trying to move the market so this what happens or whatever. And that also goes along with people that tend to follow like things like heat maps. I don't have anything against heat maps. I think they're really cool actually. But the people that look for these advanced type of metrics look for these conspiracy type things. And I'm not saying that they're not true. They could be. I don't really care. That's not what we're here for. What I am saying is even if things are engineered to an extent, you can still see what the market is doing. And this is a perfect example here on the 1 day total. Like we had the meeting here, which we had to fake out. But we had a breaker right here. And so this was your sign to say that, hey, this might be a fake move, right? And you also had the swing pattern. So you had some other things going on that was telling you, so part of my liquidity was I had a warning sign here and we had the actual sign here. So that's something to consider as well. This is a Apex Academy script, which helps identify supply and demand zones. It's really handy actually. So we had the signal right here, and you can tell this is a breaker because it went above the previous order block. So you're not so a lot of people were trying to say, well, hey, this was an engineered candle to get us to FOMO, and I'm just thinking, so what? This candle was telling you that this was a breaker candle, which means it's not a valid pump. And even if it did pump up, let's say all the way up here, it would have came back down eventually. So that's the thing. And then we had a dump following that. But what all that really tells me is this whole thing may have been engineered, and I'm okay with that. I'm not okay with that in a moral sense. I'm okay with that by looking at it on the charts is what I'm saying. And that's what I'm trying to tell you guys. Like, there's a certain point of learning how to trade where that kind of stuff just becomes completely pointless. And there's literally like 10 people that do that, and then the people that do that are just consumed by it, and they don't make any money off of it, and they're just doing it for clicks, or they're just doing it because they're crazy. I don't know. I don't really know, and I don't really care. The point is that, and I wrote about this in a tweet thread yesterday. Like, like the most. I made a list of undervalued and underutilized TAs, and some of them were very simple. Like most of them were like high time frame spot positions. Just buy on the buy on the 100 EMA, right, and focus on like a 3 day time frame. You know, buy here. Sell here. How hard is that? It's very easy, right? And yeah, you got these little clusters right here. But in the long run, those are you might get stopped out twice, and then you would have saved yourself some money. Those are so easy, right? They're so easy. I cannot tell you how easy they are, and there's this weird ego trip where once you start to learn things, and you become like an amateur to like semi-pro trader, like you stop doing these things, and I don't understand that. Like I've got a certain amount of my portfolio where I trade not necessarily this EMA, but this type of structure, right? Um, like I do that. That's one of my main strategies, and I've tell people in the academy this is something that I've made lots of money with. Um, this is something that works. Why are people doing it? It's so obvious to focus on it, and there's a lot of reasons. People want the excitement of low time frames. People think it's too noob of a thing to do or too amateur. You're making money. What is the RSI based off of? Moving averages. What's the awesome oscillator based off of? Moving averages. It's the same thing. Your favorite indicator is probably made off some sort of combination of moving averages, Bollinger Bands, moving averages. It's the same thing. This is all a numbers game, and so I really don't understand. Like, so anyway, most of the list was just very basic things, right? Um, just things like high time frame spot positions, RSI divergences. I had somebody argue with me about RSI divergences yesterday, about how on the Bitcoin chart, the 2 week chart, I was comparing the 3 week bear div, which this was a valid divergence. We had a higher high, and then we had a lower high here. Okay, crystal clear as day, and the main emphasis was nobody even. There was literally like half a person to every 100 people that were even looking at this time frame. Nobody even looks at the 3 time frame, right? But it's there and it's valid for a reason, right? So you had a clear as day bear divergence, right? And so I used this as a method to say divergences, RSI divergences, have very, very, very high conviction rates. They have very high strike rates, and they happen a lot. The EMA high time frame strategies is the only thing that does it more, and that's because EMAs are always on a chart. Those are just moving averages. Those are going to happen, right? So I looked at, I think I looked at the Brave coin, which is just an index of all the stuff from history. You can look at all the major time frames, which is like 2 day and higher, and you can see that all the tops and bottoms have divergences, almost all of them. The only exception is maybe the COVID crash, and then like really early in, like these two. And so that was also a theory as well. Like I've noticed that the more participants there are in an asset, the more divergences occur. And so things are getting easier in that sense when it comes to divergences. And that's what I've been telling people. Like I've almost been screaming at my computer, telling you guys and telling people just in general, like focus on RSI divergences. It is just so freaking easy. Okay? It's so easy. And look right here. I mean, this was from 2013. We weren't trading by then. But look, we had a 3 week divergence right here. Okay? Higher high. Lower high. That was the top. And it went from 900 to basically like 230. So this is easy stuff. It is easy stuff. And there's some misconceptions about this. Like you need to focus on the candle closes, not the highs and lows. So when I talk about higher high or lower high, like those aren't actually the highs. Those are just the closing positions of those candles. But what I did share, so when I shared Bitcoin, I, I made the argument that like I came from the position that RSI divergences are really easy to spot, but when the, like, but I was also trying to make a counter argument that someone else might bring and say like, oh, in hindsight, yeah, of course that's going to be easy to spot, but what about like when it actually happens, blah blah blah. Well, currently on the 2 week we have that. We have a divergence right here, you know, and I had someone argue with me about this, and I blocked him, and I will block anybody that just tries to blatantly argue with me for no reason. Wall said that I am cherry picking my data because I'm using the 2 week chart instead of the 3 week chart that I just showed you. Now on the 3 week chart, this is not valid. So yes, it is not valid on the 3 week. However, that does not mean that the 2 week is not valid. Okay, it different time you can use different time frames for different divergences. That is not hard. You can even see that divergence here. Okay, that's still a thing. If you were to just ignore like a 1 hour divergence because of something you see on the 4 hour, then you might as well just never look at any time frame ever again. You might as well just look at only one time frame. Okay, that is literally why time frames were created, so we can see different data from different points of views. That is literally the point. Okay, so if you can't understand that, you are not a good trader, and you never will be a good trader until you figure that out. Okay, that's just how it is. That is basic, elementary stuff that you should know before you even get a TradingView account. Okay, so if you can't understand that different things will work on different time frames, then you cannot trade, and this especially should not have your own like quote unquote educational account or whatever they got going on. But behind the scenes, it's more than that. Looks like he's got some shady crap going on, but it's not my problem, right? So what I'm trying to tell you here is that is the whole point of the videos that I do. This is a video that focuses on the weekly time frame. We see what happens on the weekly, and then we zoom in. Let's see what happens on the daily. Let's see what happens on the 4 hour. And we do that to get context within context within context. Okay? So if I'm looking at a one time frame and like, well, what if I just said, we're only going to focus on weekly time frames, so we're not going to zoom in. You might as well not watch my videos because they won't make no sense. Okay? The whole idea is to look at a different time frame, zoom in, see all the data, see the sub trends. I've talked about that in Apex Academy. Sub trends are vastly, vastly important, and those are one of the main reasons why people lose positions early. They get into a position, they finally get a position that they like, the position's finally going their way, they've traded 10 times, they finally got something where they're making money, and then they close it early because they see a sub trend, a consolidation before continuation, and then they exit on that sub trend, and then it continues to go higher without them. Okay, so you got to get used to sub trends. You got to get used to time frames within time frames, context within context, and this is the big part of it. If you can't understand that you can have multiple divergences on multiple time frames, then you cannot trade. You cannot. You should just close your accounts, and you should just donate your money to charity, because that's the best place to have it right now. Okay, because you will not be able to manage it on your own. So that's the first thing that was discussed. Okay, that this is not a valid divergence because it's on a 2 week versus a 3 week. What? That makes literally no sense. All data would literally be irrelevant. Okay, I know I have a little bit of advantage because I did probability and statistics in college, and so this is kind of, I look at things like, as I view them as numbers as well as visuals, but the time frames are just numbers. It's just statistics that have been visualized. Okay, like you can look at statistics differently and get good results. Okay, I'm not cherry picking any data. Okay, I'm showing from a macro view how divergences from the RSI works extremely well. It works on the Bitcoin. It's worked since 2013 on Bitcoin. It's worked since 2008 at least on the SPX, I think, the S&P 500, and it worked, I believe, since 1999 on the Dow Jones. And I honestly didn't even go back farther than that because I'm just too tired. And if you can't understand my point by the past 30 years, then I can't prove it to you. Okay? I've got people that argue with me about these things, and they're arguing for the sake of arguing. If you cannot understand that there is at least one macro relative point of data about this for the last 30 years, then you refuse to understand. Okay? And at that point, you're on your own. And these very same people are into their very conspiracy theory type of things that the market is just gonna nuke for the next 2 years because they think that the COVID crash never should have happened. So then we have to go exactly back to that point to retest it. No, that is based off of your feelings. That is based off of pure theorizing what you think might happen based off your own thoughts. It is not based on what you can see out of the market. Okay, we crashed because of COVID. Okay, the COVID crash itself was not supposed to happen. That's the thing that people don't understand. That crash itself was not supposed to happen, and it immediately retested in a V shape. Okay, that's the end of the story. That's why things went up. It was one of those things like the market went up because people were taking advantage of consumer goods, and people had to buy more consumer goods because they were stuck at home, and they did more remodeling because they were stuck at home. Okay, so that's the reason why people want to think that we need to retest the lows in the COVID crash, but the COVID crash itself should not have happened, and that's the real reason why that we're probably not going to go down that low. Okay, um, I have very high doubts that we get down to 5,000 again. We might. I don't care. If we do, I'm ready for it. You always got to be ready for a plan. Okay. But a lot of this goes into other things like the S&P 500, the Nasdaq, the Dow Jones, all that stuff. Like, yeah, the market's not going to do what you think it's going to do. You are not in charge of the market. You are not Jake Remington, which is the guy that said, "I am the storm." You are not the storm. Okay, you're not the storm. You, I don't care who you are. You are much less significant in this market than you think that you are. And if you are significant, you're probably not listening to the video. So, and I don't say, I say that to humble people. I don't say that to make fun of people. I say that because you need to change your attitude and outlook on this and just look at this, look at the charts as they appear. Don't look at who might be manipulating data. Don't look at fancy targets just to try to be right. It's not even about making money because you can make money without having to focus on those things, right? So it's an ego trip. Don't focus on an ego trip. Focus on making money. Because at the end of the day, if you're somebody like me, you are married, you have a kid, you have a family. I'm trying to support. One of the reasons I do full time is so I support my family. Okay, my son is disabled. Okay, my son is disabled, and my goal has shifted in one way to get him a trust fund. Okay, that's my financial goal. Okay, to support my family and get him a trust fund, because when he is 25 years old, he's not going to be able to manage himself. I hope that he can. I don't know if he will. So that's my goal. What's your goal? Okay, is your goal to focus on conspiracy theory targets, or is your goal to make some freaking money? Okay, that's it. Like, I know I went on a rant there, but that's part of it. Anyway, the second thing, that was actually just the first thing. The second thing, I'll be short with this, is like, people are not saying that this is a valid divergence, and one of the reasons is because the slant on this is not big enough, and that's bullcrap. Okay. First of all, it's coming from a disjointed viewpoint because from this standpoint, it doesn't look that big, right? So let's zoom it up and look at the details. But RSI does not care, and a lot of people have misconceptions about the RSI. The RSI is not is not pending based off of its diagonal strength. It is just based off numbers, okay? There's two things that people get misunderstood about RSI. One is the angle on the divergence. The angle on the divergence does not matter at all, okay? I've not seen any historical evidence that that matters. And that is sentiment and that is feeling. And that's exactly why people get stopped out. That's exactly why people ignore crap like this. Because they see something obvious and they don't want to see it because it changes, it goes contrary to what they really want to see. So it's feeling based. Two, the RSI goes based off candle closes, not highs and lows. It does not go by wicks, it goes by candle bodies. And one way you can see that is by going to a line chart. So now you can see this divergence much more in play. Okay? That's one thing. A lot of people think that it's highs and lows. So when you switch this up, this would still be a divergence even if you did the highs and lows. But some people, might say like, well, this high closed higher than this candle body, so maybe not, and that's stupid. Okay, I can see why people get messed up by that because they do talk about higher highs and higher lows, but you go based off candle bodies and you go based off of the numbers as well. So if you go based on here, so let's go ahead and target these two. I hate to kind of rant on this, but this is such an obvious thing that I'm being made fun of for. So, yeah, I'm just gonna go over it. So you look at the main two lows. So you had this low here. This one is not counted. Okay, this longer body with the wick is not the low. This is the low. Okay, that's the first mistake that I see people do, and this is the low because it closed lower than this one. So that's one thing. So when people see this, they might shift this over here and say, well, hey, this is not as low as it can. No, it goes here. So that's one mistake that people do. Another one is it's also going to be, since it's going to be closing candles, it's going to be bearish candles. So this is it here. And so if we zoom in, I really apologize for my rant, but anyway. So like you zoom in here, this bullish candle is actually lower on the lows than this one was. But this one is counted because it's the lowest closing body. So that counts as well. So if you were to count this candle, which is some people do, and this one, I actually have not measured this. And so it still technically would count, but you got like two little deviation peaks. So that's where people are probably getting messed up. But you do the two closing candle bodies, so which would be here. And so as you can see, those are the two at the bottom. And then we can draw our line. Does not matter. The line is, I can't emphasize this enough, the line is arbitrary. It doesn't mean anything. Okay? It doesn't mean anything. It's just a line that I freaking draw on a chart, okay? I can't emphasize how abstract that is supposed to be by design, okay? What you can see is that here on the lows, the RSI, and you have to put it right here. You have to look on right here while I'm doing this. Right there, the RSI for this one is at 34.18. So that's the lowest one, right? Here, it's 35.68, which is actually about 4 to 5% higher, okay? Which is pretty significant as it is, honestly. It just doesn't look significant because you're too zoomed out, okay? But a 5%, honestly, is actually pretty good. That's not my argument. I'm not going to go there. But that is a pretty significant percentage. So this is valid. Another reason why the trend doesn't make sense is because you can't necessarily justify the price of as a percentage point. So this is valid. I'm telling you, this is valid. Okay, we pumped here. We dumped for this current 2-week candle. I'm not sure. I don't know if we're in a new candle or not. I'm not sure why it's not telling me. But people see this. People see the stupid meetings from last week, and they're saying, "Well, this is not a valid divergence." Who's telling you that? This is still valid. This is still above. Even if this was to go below, it could still be valid. It still could. I'm not saying it will. It could depend on certain conditions. So I really want to emphasize that. This is a valid divergence. It doesn't matter if it's on a different time frame. This is the time frame that I'm looking at, and this is the current day. If you saw if you saw a divergence from 2018, let me see what we got here actually. I know I'm really ranting on this, but okay, so that wasn't valid on this time frame. But we had a divergence here. Let's see if I can find it. And this right here is where people are like, well, you're trying to look for it and try to prove me wrong. And no, you look at the charts for the data. How hard is that? And you play what you see. Right here, third day, lower low. You actually had a series of lower lows. So this actually might happen upcoming because we had 3 crows down. People thought we were going to super low, and that was the low, right? And we had a divergence here. So you're telling me we could potentially be at this candle, and you are telling me that you do not want to long this. Okay, I understand why you may not want to, but in hindsight, how amazing was that? You know, and so that's what I'm saying now. Like that's the counter argument, right? Like, well, that's in hindsight. Of course, it's easy. Well, we have pretty much the same thing going on here. You know, we have this divergence from the 2 week. You know, it's crossing this line. We could technically see a low into the low 15,000s, and this could still be valid. Okay, and that's where people are going to get tripped up. People are going to see this as like, oh, we're going to go lower, and we may not. It might be the actual low. So this is also a wedge, which is a bullish pattern. Okay, don't necessarily get fooled by all the red. Yes, the red's going to happen. I'm not saying this is going to play out bullish. I'm just saying these are typically things that happen during bottoms. Okay, just saying. So I know I've ranted long enough about that, but these are obvious things that are so completely obvious, especially in hindsight. And I've just seen too many freaking instances on Twitter, especially, where it's just like, yeah, that would have been cool like 2 years ago, or like people see this crap 2 years ago and it's like, oh, I wish I could have longed here, wish I could have did this, wish I could have did this, or I bring up an argument like, yeah, that's easy to say in hindsight. You know, it's easy to look at patterns from 2 years ago. I'm looking at this right freaking now, okay? I'm looking at this right now, and I'm telling you right now, okay? I can't emphasize this enough. I'm willing to be 100% wrong, okay? I'm not telling you to buy. I'm not telling you to sell. I'm just looking at the data, and here's what the data is telling me, and here's what I'm personally doing in response to this. I have a risk management plan in play in case I am wrong, okay? So I'm not gonna go bankrupt by doing this kind of stuff, okay? I'm not telling you to go all in, not even telling you to buy. I'm just saying, look at the data, and don't try to argue with me about some stupid point that you're not even willing to have an honest, healthy discourse. If you are wanting to honestly give me an explanation and you're being relatively nice about it, you know, I'm okay. I will be very nice to you. I will have a reasonable discourse. I will, you know, I've been relatively known as a nice person on crypto Twitter as well. Like, I will talk to random people that don't even follow me, and I will share charts, and I will share thoughts, and I'll share ideas, and I'll go above and beyond the normal person. But if you try to piss me off on purpose, you're gonna not see a very good side of me about that. And it's not that I'm trying to be rude. I'm gonna be very stern, okay? I'm not gonna appreciate being talked down upon, especially over a topic that that person doesn't know about, and trying to argue with me about something that does not work. Historically has never worked. Historically has never been part of the actual theory to trading in that respect. So I digress. I've chatted about that a very long time. But that's just a crash course with the divergences. And it's, again, you know, I don't want to necessarily say like, well, I know that I'm right because people are arguing with me. It's not about that. Okay. Like, this is, I was correct about us going down from the 3 week bearish divergence, from 60,000 plus. I was not very vocal about it, but I had a lot of people. A lot of people were crying. A lot of people were trying to rebuke that, trying to say we're not going to do that. We're going to go to 100K. We're going to go to 200K. This is it. No, it wasn't. It wasn't. Okay. Arun and a lot of strategies that I use are designed to see changes of momentum, designed to see changes of the trend, and people don't like that. Okay, and that's natural to feel that way. By the way, I don't fault anyone for saying that. I have a historical amount of evidence where I accidentally make people mad because I can see a trend before they see it, before the average person sees it. Okay, and I'm not saying I'm right. I'm never saying I'm right. Okay, I'm just saying like Arun is telling me that a trend is about to shift. People don't like that because people want 8K, people want 5K, people want 1K. Like how much more lower do you want? Okay, you already have a good low in here. You have a good bullish structure here. You have on the 2-week chart, I believe. Yeah, you got a liquidity buy on a divergence here. One of the biggest sets of confluences that I can actually have on the Avon. We have it. So that's why I'm very convicted by this. So, and I'm willing to be wrong. The thing is, if you are on the other side, are you willing to be wrong? Are you willing to accept that this could be the bottom? Because nothing outright tells me that this is bearish necessarily. Yet we had a bearish retest, but we have bearish retests all the time. We have swing failure patterns all the time. We have engulfing patterns all the time. And none of those are necessarily, like right here, we had a bullish engulfing, which is designed to be a bullish sign, right? No, we freaking faded. It's not a bullish sign. And those patterns are deceptive. Like we look at these patterns, yeah, we had one here, we had one here, but then we had one here that didn't work, right? So they don't really work out that well. You know, we had one here that ended up being a top on this level. So I don't know what you're trying to tell me. You know, we had another one here. Bullish engulfings and bearish engulfing candles are just as much of a sign as a reversal as they are a continuation. And that's what I teach in the academy as well. Okay? Don't look at engulfing candles by themselves. Don't look at any pattern by themselves. Use it with confluence with something else. So that's something to consider. Okay? So I need to move on. I've spent way too much time on that. I always try to promise a short video, and I never stand up to that promise. So let's go to the daily. We're going to shift. All right, so on Bitcoin on the daily. So I'll just keep this liquidity script on because I think it gives a good example of the supply and demand zones. We had kind of a pause in the week because of all the meetings. We had a pump from one of the meetings being positive. We had a blow off top, a strike through down. This is telling me a few things. Actually, you know what? I'm going to toggle it off for now. We had a kind of a zone right here. This was your range. We were kind of consolidating into the range. So we would break out, had a deviation below this, deviation above. So now we're breaking down below. I don't care if this is engineered or not. Like a lot of people are saying it is. Doesn't matter. What is the chart saying? Chart saying we consolidated through the range, deviate above. Now we're back down within the range. So now we're back to playing the range again. Okay. There's nothing outright strange about this. And so we're going to play the range here. So on a macro view, if you're a bull, you just want to kind of long this range again, right? Probably target the mid somewhere. If you are short, you want to do the opposite. You want to wait for a low to come in. I personally don't recommend any shorts for the rest of the bear market, at least on time frames as high as the daily. Because your short exposure is going to be limited, right? Because like even let's say you got the perfect short of shorts, right? Like you got like, let's say you target the high here. Let's say traditionally you would probably target the wick, and let's say we went down to like 10,000, right? I don't know what this just did. So, you know, you're not even going to get a 4R. I mean, you can get that on a lower time frame, easy, right? So even if you were to target like down to 8, you're not even getting a 5. So the reward is just not the reward does not justify the risk any longer. And so one of these, this is why I'm looking at this from a bottom, like a perspective of it being a bottom, is because price tends to slow down when this happens. Engagement on Twitter tends to slow down. Everything slows down. Liquidity, everything. And this is a sign of a bottom scenario, not a continuation scenario. Okay. Yes, we can go down. I'm under the belief that we won't go any lower than 14,000. I've got some data to prove that, but I'm not going to go into that rabbit hole. However, based off of what I see, right now this is very behaviorable of a bottom. Even if we do go down that low, even if we go down to 11,000, we're not just going to, it's not going to be as violent as we've had it, right? The capitulation is finished. Capitulation was here, and we're pretty much in the anger phase, right? So that's how I'm viewing that. Yes, we can go lower. I don't think it's going to be as exciting as you think, and I can guarantee you, if we're going down to like 13K or 10K, people are still going to want 5K. People, we did this here, okay? I was here. I started somewhere, somewhere in this range. It was before the top happened. I was here. I lived through this. I lived through this. I'm living through this. Okay. Same thing. Nobody cared to buy here. Nobody was interested to talk. Okay. This was my first bear market. I wasn't active. Okay. I said, screw the charts. I logged off for a month, and or 2 months or whatever. And then I found out that I actually had some Bitcoin. I made twice the money. Walking off the charts was one of the best things that I did at that point. During here, nobody wanted to buy, right? COVID crash happened. I remember exactly what I was doing. I was sitting on my couch, concerned about my family with the pandemic going on, and I decided to say, screw it. I'm going to try to relax. I'm going to learn how to play guitar. I know that sounds really dumb, but I did try to learn to play the guitar during the pandemic. I was a little bit depressed that I thought we were going to go up. We didn't go up, okay? And that was 2.5 years ago. So, and I still didn't learn. I didn't play guitar, so I failed in that regard. But this was the perfect time. That was designed to, this crash and the depression state was designed to be a distraction to get you out of this, and it worked for most people here. It worked for most people here, and it's working for most people here. Okay, and I refuse. I refuse to be put down in that regard, based off what I see in the markets. And so, this is a very bottom-esque formation. Yes, we can debate about targets. I think that I think it is plausible. We could even see like upper 11,000s. But other than that, and if we do, I think we'll see an extended rally for a little bit of a rally first. So, and if that's the case, I can see us following this line here, to, maybe like March or April. So we'll see. But that's why I'm taking the viewpoint as more of a bottom-esque thing versus, it's, even if it's not the bottom, it's not an accelerated one. So anyway, 4 hour, we're going to zoom in. And so one thing we can see here, we had this gap here as well. And so this kind of fits in right here, and that's one reason we're kind of in a conflicting zone. We're trying to look at the general direction of this. And again, it's very hard to gauge. Liquidity is low, interest is low. And so prices can move much more differently and engineered as you might expect them to go. So I would play this range for a micro view, but I would honestly just wait for this massive range here. We're going on week heading into Christmas, so I'm not expecting a lot of volatility this week or the rest of the year. So I would just honestly just keep it cool. Play the range, enjoy time with your family, and what have you. So that's it with Bitcoin. All right, so we're going to move on to Ethereum, and Might have to cut a couple of these coins short. I didn't mean to rant for so long. Weekly time frame. So we had a much more higher acceleration last week than we did before. Arin is still under bullish consolidation. We're still maintaining that, so nothing really to see here. Just on, we had a good down move, as we can see from the daily. But if you kind of zoom off to the side like this, we still have this structure here. We want to highlight this structure, and we're still in the middle of this. So honestly, pretty similar thing to Bitcoin. Nothing in particular to keep note. I would not long this until we got out of this. I probably would wait till 1300s. I think I've been saying that for 2 or 3 weeks now, but nothing's really changed. There's no real reason to kind of view this any differently. This is still kind of a retest, and this is where I would probably get into a debate with some other people as well, because people will see this structure, combine it with this structure, and say, all right, we're on a bouncing ball like 2017, 2018, and we could. That's very possible, but this is actually like a rounded retest. This is much more patternistic of an Adam and Eve versus a traditional like a diagonal like a descending triangle, because we haven't tested this too many times. Okay, like I can see where people get that, but this is just one cluster, and we've like, let's say if we highlight the mid, so let's say like the middle of this. So we tested this spot on here, and we're still above. Okay, so this was just a retest of this. So this was a higher low from the lows here. This is still a higher low from this. So this is not by definition, like on a technical level, a descending triangle. It's more taking the form of a Adam and Eve pattern. You got the V-like structure, you got the bull showing up here, and so this is one of those things where if we break above this, I would probably start longing, because that would be more of a confirmation of an Adam and Eve. So I'd probably target something like that. Probably target below this. I think it can be inside this block. It doesn't necessarily matter because it's a long-term play. But I would do something like that. Maybe even reduce my stops a little more. So that's how I'm viewing that. I'm viewing it as this is a series of retests. This is not a bouncing ball pattern. And again, people focus on that because they want to see bouncing ball patterns. They want to see bullish engulfing patterns. They want to see what they, RSIs that aren't RSI divergences and things like that. So anyway, but as far as the macro view, we'll shift to the 4-hour again. Same thing going on here. Got this cluster here. We actually did retest this. This is a sign where I think if we stay relatively, not completely bearish today, like if we stay above like 3%, and if we stay above here, I think this could actually go up for the rest of the week. I honestly think we'll stay relatively break even for the rest of the week, honestly, and then we'll have a pump going into Christmas, which we've had for a few years now. So other than that, I think I'm going to cut this short because I think it's already long enough, and I apologize if you didn't care for the rant. I hope that you enjoyed this video. I'm going to cover those coins on Wednesday for my crypto, casual crypto and coffee. That might be a little bit shorter because I got a lot of stuff going on this week with the holiday season. So maybe I'll put that on tomorrow or Thursday or what have you. But I hope you enjoyed this video. The macro outlook is that I think that we're just going to have not a big reaction this week. I think it's a good week to spend time with your family and friends this holiday season. That's what I'm going to be doing. I don't see any reason on a even on a 4-hour to even focus on the charts right now. So it makes for perfect confluence to enjoy your holidays. So with that being said, I hope you enjoyed this. Let me know what you think. Like, subscribe, follow me on Twitter, and I'll see you next time.